All right, Bitcoin Bulletin viewers, buckle up. We're kicking things off with a bombshell prediction from Deutsche Bank. Are central banks really going to start stockpiling Bitcoin within the next 5 years? Deutsche Bank research suggests that Bitcoin could soon find its place alongside gold on some central bank balance sheets. They believe both assets can act as hedges, and the path Bitcoin might take mirrors gold's own slow but steady adoption into official reserves. Next up, we've got Solana co-founder Anatoly Yakovenko weighing in on Bitcoin's incredible resilience. He's addressing those big fears about centralization and even state-sponsored threats. Yakovenko explains why Bitcoin remains secure and robust, even with large holders accumulating massive amounts and the shadow of potential attacks looming. He believes Bitcoin's core properties will endure, and for those who truly value it, this resilience is an opportunity. Now, let's talk price action, because the charts are telling a story. Bitcoin is showing some concerning patterns that analysts are warning could signal a steeper crash. We're seeing technical corrections and indicators pointing towards a potential bear market. Could this be a major turning point, or just another dip before the next rally? We're diving deep into the chart formations that have everyone talking. And finally, a massive play from Hyperscale data. This company is aggressively expanding its Bitcoin treasury, pushing its allocation to a staggering $13.25 million, which is nearly 40% of its market cap. They're aiming for a future where their Bitcoin holdings match 100% of their market capitalization. What does this bold move mean for the market? We break it all down. You won't want to miss this episode, so hit that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss a beat. Central banks could be hoarding Bitcoin by 2030. Get ready for a seismic shift in global finance. Deutsche Bank's latest research is dropping jaws with a bold prediction. Central banks might start stockpiling Bitcoin within the next 5 years, potentially placing it alongside gold on their balance sheets. This isn't just speculation. Deutsche Bank's paper lays out a compelling case, suggesting that both Bitcoin and gold can serve as crucial hedges against various economic risks. The bank even draws parallels between Bitcoin's potential adoption and gold's own historical integration into official reserves, signaling a maturing digital asset landscape. Deutsche Bank highlights that Bitcoin's market characteristics are evolving. Recent data shows a noticeable decrease in short-term volatility, and prices have even flirted with figures exceeding $123,000 in the lead-up to their report. These are flagged as key indicators of Bitcoin's growing maturity. While gold continues to see robust demand from official institutions, Deutsche Bank posits that central banks may begin viewing Bitcoin not as a replacement, but as a complementary store of value, diversifying their holdings. The bank's analysis delves into the supply dynamics, emphasizing Bitcoin's fixed cap of 21 million coins. Coupled with increasing institutional accumulation, this scarcity has significantly tightened market supply. Simultaneously, Bitcoin's 30-day volatility recently hit historic lows, a factor analysts believe could significantly reduce a major hurdle for reserve adoption. However, the report acknowledges that substantial price swings remain a possibility and will be closely monitored by any central bank contemplating a shift in their reserves. The path to adoption is likely to mirror gold's gradual entry into official reserves, involving intricate legal and operational frameworks for custody, accounting, and valuation. While the US dollar is expected to maintain its dominance, diversification into non-dollar assets could push officials to explore alternatives like Bitcoin. Nevertheless, significant policy and practical hurdles, including custody solutions meeting stringent security standards and regulatory updates, must be addressed before this prediction becomes a reality. The crypto community is buzzing, with many seeing this as validation of Bitcoin's long-term potential as a global reserve asset. Analysts are closely watching how these predictions align with actual central bank policies and technological advancements in the coming years. This prediction could fundamentally alter the global financial landscape, but what does it mean for Bitcoin's price? We'll dive into the technical analysis next. Bitcoin's unshakable resilience. Yakovenko defends against centralization and state threats. In a candid discussion on the All In podcast, Solana co-founder Anatoly Yakovenko tackled the burning questions surrounding Bitcoin's security and resilience. Host Jason Calacanis raised valid concerns about centralization, pointing to major holders like MicroStrategy. Yakovenko's response was clear. Bitcoin is fundamentally resilient to the collapse of even its largest holders. He asserted that the core properties people value in Bitcoin would endure any transition, framing such events as opportunities for dedicated holders to acquire more. When the conversation turned to potential state-sponsored attacks targeting large Bitcoin holders, Yakovenko underscored the paramount importance of property rights and privacy. He stated, "Privacy is a right. Somebody should be able to control that, but defending the right to own Bitcoin is foundational to wealth creation." This defense of individual control and ownership rights is central to Bitcoin's value proposition. Adding to the discourse, Chamath Palihapitiya noted the strategic advantage of hypertransparency regarding coin ownership, suggesting it makes assets less susceptible to confiscation. Yakovenko also lauded Bitcoin's elegantly simple design, calling it the coolest piece of software written in the last 20 years, a stark contrast to more complex blockchain systems. Meanwhile, DoubleLine Capital CEO Jeffrey Gundlach expressed skepticism about the crypto industry's credibility, comparing it to past fleeting financial trends and stating he avoids it altogether, noting Bitcoin's underperformance against gold this year. Michael Saylor, CEO of MicroStrategy, offered a different perspective, explaining Bitcoin's sideways trading as a natural part of its life cycle, driven by early investors diversifying their holdings despite its significant year-over-year gains. The crypto community is divided, with some viewing Yakovenko's insights as a strong defense of Bitcoin's decentralized ethos, while others remain cautious about the long-term implications of concentrated ownership and regulatory pressures. While Bitcoin's resilience is being debated, its price charts are flashing warning signs. Could a major crash be on the horizon? Stay tuned. Bitcoin's bearish signals. Chart patterns point to a potential steep crash. The Bitcoin market is flashing red as several critical chart patterns suggest a potential for a prolonged bear market. After a recent drop below $112,000, marking a significant technical correction from its year-to-date high, analysts are scrutinizing the indicators for signs of further downside. One of the most concerning patterns identified is a head and shoulders formation on the daily chart, with its neckline support at $107,700. This bearish setup is further reinforced by Bitcoin's descent below the 50-day exponential moving average and the Ichimoku cloud, coupled with a downward trend in the relative strength index and MACD indicators, all signaling increasing bearish momentum. If these patterns hold, the price could plummet towards the 50% Fibonacci retracement level at $99,050, representing a roughly 12% drop from current levels. A move above the right shoulder of the head and shoulders pattern would be required to invalidate this bearish forecast. However, the weekly chart presents an even more alarming picture, revealing a large rising wedge pattern that has been forming since February of last year. Historically, the convergence of this wedge's trend lines often precedes a strong bearish breakdown. Compounding these technical signals is a bearish divergence observed in the percentage price oscillator, which has printed lower lows and lower highs since March of last year, even as Bitcoin's price surged. The relative strength index has also formed a descending channel during the same period. Furthermore, Bitcoin remains significantly above its 200-week exponential moving average, suggesting a potential for mean reversion, a return to its historical average price. This could trigger a sharp decline, potentially pushing the price towards the 50-week EMA at $81,000, followed by the 200-week average at $63,000. Past cycles have seen significant drawdowns, such as the 78% plunge from its 2021 peak to the 2022 low, yet these have historically presented buying opportunities. Traders and investors are on high alert, with many debating whether these technical indicators signal a genuine market downturn or merely a temporary correction before another upward surge. The community is closely watching the $107,700 level as a critical support. While charts predict a potential downturn, one company is making a massive bet on Bitcoin's future. We're talking about Hyperscale Data's bold treasury strategy next. Hyperscale Data goes all in on Bitcoin, targeting $100 million treasury. Hyperscale Data, NYSE American, GPUS, is making a powerful statement in the crypto space, announcing its Bitcoin treasury has surged to $13.25 million, now representing a significant 39.4% of the company's public float. This aggressive allocation underscores a deep conviction in Bitcoin's long-term value. Through its subsidiary Centenum, the company holds nearly 20 Bitcoin, valued at approximately $2.25 million based on recent market prices. But they're not stopping there. Hyperscale Data has earmarked an additional $11 million for open market Bitcoin purchases, signaling a clear intent to significantly expand its holdings. The company is implementing a dollar-cost averaging strategy, planning to acquire Bitcoin daily with at least 5% of its custodial funds. This disciplined approach aims to mitigate the risks associated with market volatility while steadily building its reserves. Hyperscale Data remains steadfast in its ambitious goal to accumulate Bitcoin equal to 100% of its market capitalization, with an ultimate treasury target set at an impressive $100 million. This strategy positions the company as a major player accumulating digital assets, potentially transforming its financial profile. This bold treasury strategy is generating significant buzz. Investors are closely watching Hyperscale Data's progress, with many seeing it as a bellwether for how public companies can integrate substantial Bitcoin holdings. The company's commitment to weekly reporting provides transparency, though it also brings short-term performance scrutiny. The primary questions revolve around the funding for the remaining $86.75 million needed to reach their $100 million target, and the feasibility of overcoming logistical obstacles in fund transfers to their custodian, which they anticipate resolving soon. That's all the top news for today. But before you go, let's do a quick recap of the biggest stories. And that's a wrap on today's Bitcoin Bulletin. We saw Deutsche Bank predicting central banks might be stockpiling Bitcoin within 5 years. Solana's Anatoly Yakovenko defended Bitcoin's resilience against centralization fears and state threats. Technical analysis warned of potential chart patterns pointing to a steeper Bitcoin crash. And Hyperscale Data is aggressively building its Bitcoin treasury, aiming for $100 million. If you found this information valuable, smash that like button, subscribe to the channel for more daily crypto insights, and hit the notification bell so you're always the first to know. Don't forget to follow us on all social media platforms for real-time updates and join the conversation in the comments below. See you next time.